Good morning, everyone. Welcome to an episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is sinking ships and rising tide. Last week was also not short of upheavals, as the Middle East conflict went from fears of a spillover accelerating to a peak when the US joined in to release bunker buster bombs on Iran. With the nuclear facilities damaged, Iran's telegraph retaliation paved the way towards ceasefire. Subdued geopolitical tensions buoyed with sentiments, alongside rising expectations of rate cut bets. Fund and US CUs plunged, and US equities rallied higher. With Q1 US GDP being revised lower on account of lower private consumption spending, it represents another dent to the sinking US exceptionalism narrative. The divergence between US economic growth and US equities is somewhat at odds with the well-known quote, "A rising tide lifts all boats." Perhaps markets are hoping that Fed rate cuts will steer the economy in the right direction. Powell, though, may be facing the prospects of a shadow Fed chair, providing conflicting signals amid reports of President Trump considering early nominations. Either way, the dollar sank against all G10 peers. The euro was buoyed with ECB officials presenting a picture that rates may stick around for longer, with Chief Economist Lane saying that disinflation is largely complete, and Lagarde saying that policy is well placed. Down under, the Aussie dollar gained despite initial restraint from a softer than expected CPI, which sets the stage for another RBA cut in Q3. Job vacancies rising 2.9% quarter-on-quarter also indicates a still robust labor market. In East Asia, Taiwan dollar was an outperformer, but end of the week movement in which Friday's gains were raised in a sharp move hints at central bank intervention. The Bank of Thailand's decision last week was a dovish hold, as they acknowledged weakness in H2 GDP growth and worsening financial conditions. Furthermore, the main emphasis appears to be the timing of easing rather than a reluctance to ease. The explicit stance of monetary policy being accommodative to support the economy going forward, taken together with an active acknowledgement that they stand ready to adjust monetary policy going forward, is a clear bias towards easing. Thailand's political uncertainty is certainly not easing, as Prime Minister Paetongtarn faces a rising tide of opposition, with domestic protests over the weekend, no confidence vote in July, as well as external pressures from Cambodia's Hun Sen attacking the Sinawat clan. For the upcoming week, Thailand's current account surplus will be overshadowed by these ongoing political developments. Nonetheless, it is worth noting that the return to a surplus is likely driven by improving goods balance on front-loaded exports to the US rather than services receipts, as tourist arrivals contracted in May amid the seasonal lull. Amid the slew of trade data in Indonesia and Korea this week, as well as PMIs across the region, attention will be turning towards detecting possible peaks in the front-loading of exports to the US. In the same vein, attention will be on trade talks. Japan's trade negotiator has said that the 25% tariffs on autos is unacceptable given its impact on the economy. Quotas perhaps may be an off-ramp which allows exemptions but allow the 25% headline to be kept. India has a trade team arriving in the US to secure an interim deal to resolve sticking points such as genetically modified crops, and US President Trump said that late this week there may be a big deal with India. Meanwhile, Thailand's finance chief will head to Washington this week in order to secure a deal. All in, amid the rush to secure deals, it remains unclear if the tide of tariff uncertainty will subside or be extended past 9th of July, or perhaps the tide may go out to reveal buried envelopes prophesizing country's fate. For more information, please refer to our Week Ahead publication or contact your respective sales desk and our apps. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you. you.